Hey everyone, welcome back to the channel. Today, we're diving into one of the most exciting topics in crypto right now, the current Bitcoin bull market, and how it could be following in the footsteps of the legendary 2015-2018 cycle. Grab a coffee, sit back, and let's break it all down. First off, let's talk about something that's on everyone's radar, the drawdown profile. Sounds fancy, right? Basically, we're looking at how much the price has dipped from its recent highs. And guess what? The current cycle's pullbacks are almost identical to the 2015-2017 bull run. That's right, these minor dips have been totally within the expected range. But here's the kicker. We might just be at the calm before the storm. Historically, when Bitcoin reaches this point, we often see an acceleration phase where the price can shoot up like a rocket. Now, onto the realized cap, which sounds technical, but trust me, it's crucial. Think of it as a way to track how much capital has been invested in Bitcoin over time. So far, it's grown by about 2.1x in this cycle, which is pretty solid. However, it's still far from the explosive 5.7x growth we saw last cycle. The crazy part? We haven't even seen the full euphoria phase kick in yet. That means if demand picks up, we could still be in for a massive run-up. Next up, and this is where things get a bit more interesting, let's address the elephant in the room. Exchange balances. We've all heard the talk about Bitcoin disappearing from exchanges, causing a supply shock. But hold up. While Bitcoin balances on centralized exchanges have dropped to about 2.7 million BTC, most of this is due to coins being shuffled into ETF wallets. Yes, you heard that right. The launch of Bitcoin ETFs, particularly ones using custodians like Coinbase, has caused a significant chunk of coins to migrate. So, the theory of a supply shock from individual withdrawals? Not quite. And speaking of these ETFs, they're a major player in this market structure shift. The balance between exchanges and ETFs is holding steady at around 3 million BTC, which is essentially the same as what we saw at the start of the year. So while it might look like the market is running out of Bitcoin, it's more about how the coins are moving around, not disappearing. But let's zoom out and talk about capital rotation. Bull markets thrive on long-term holders, selling to new buyers. When long-term investors cash out their Bitcoin, newer investors jump in, driving the price higher. We're seeing this dynamic in full force right now. In fact, over 1 million BTC have shifted from else to new investors, showing there's fresh demand at higher price points. And this demand is what's been holding the 100 caler level strong. So what does this all mean for the future? Well, if history is any guide, we could see the price continue to climb, possibly entering a phase of euphoria where everyone wants a piece of the action. But we need to keep an eye on one thing: demand exhaustion. This is when the buying frenzy starts to slow down and the market transitions into a phase of hodling. We've seen this before in both 2017 and 2021. And it often signals the peak of the market before the next correction. In conclusion, while the current market might feel a bit more measured and stable than previous cycles, it's all part of Bitcoin's maturing market structure. The growth rate is slowing down, but that doesn't mean the party's over. In fact, there might be a whole lot more upside ahead, especially if the demand continues to grow as new investors pour in. The key takeaway? Pay attention to how these capital rotations play out, and remember, not everything you hear about supply shocks is as it seems. That's it for today, folks. If you enjoyed this breakdown, don't forget to hit that like button, subscribe, and leave a comment with your thoughts on where Bitcoin is heading next. Let's keep the conversation going. What's your take on the current market? Until next time, happy investing, and stay ahead of the curve.